Hey everybody, welcome to the Closing Beat. How you doing today? Hope you had a good weekend. Everybody's good out there. Let's get talking about the stock markets here. We're financial advisors. We like to talk about the stock markets. We're looking every day. We're not like your typical advisor that just, I guess, invests your money and goes and does something else. I've happened to talk to a lot of financial advisors over the last month and a half or so, and boy, do they have a lot of time to talk. I don't get it, man. Why not do the work? Anyways, we like teaching here. So when we're not spending time investing for you, we're doing classes, we're teaching. This Thursday, we're considering doing like an open sort of public class because in the coming weeks here, as we get to the end of the year, we're going to do like a big market outlook, market sort of, review of the year, what to expect going forward for our customers. And I thought, well, maybe we'll do a class for the public before we do that. So if you're one of our customers, be on the look for our sort of our bigger class of the year where we cover all kinds of geeky stuff we've been preparing for you here in the background. And if you're one of those that just likes to learn about the markets and your investments and likes to be taught, some of the best financial gurus out there say you got to find somebody that wants to teach you rather than just tell you what to do. And a lot of times you'll find my email responses are and phone calls are more in depth because I want you to learn. I really want you to learn how this works because when things go bad one day, you'll know exactly how they work. You won't freak out and we'll be able to pull you right through it. Anyways, we're also playing a game. It's called Guess the Dow. You're welcome to play whether you're a customer or not. Go to jazzwealth.com/guess the Dow. Tell me where you think the stock market, the Dow in particular, is going to close next week. If you're the closest without going over, we'll send you a $100 gift card. Our customer, Jinwan, was our winner last week, and we're crediting their account. If you're one of our customers, you have the option in the form there to say, hey, I'd like to have my account credited, or you could take the gift card as well. Jinwan won the $100, so decided to have his account credited, and so that's working well there. Last week, our class, by the way, was on some of the end-of-year stats, and so some of that we can see is playing out here exactly in the market. So if you're one of our customers, go into the dojo, check it out if you have a moment. If not, I'm doing the weekly emails now, so we'll give you an update there as well. Anyways, the stock market today down a little bit, 105 points on the Dow. You got 9 points on the S&P. Let's call it 10 points, and 34 on the NASDAQ. Here's the S&P 500. Like we said Friday, there's not really a lot of news to go on here to start the week. We got the Fed announcement later this week. They're probably not going to do anything. You got the ECB the day before coming out there. You got a trade deadline coming due here. And so, there's a few little bits of economic news that come out along the way, but the beginning part of the week rather quiet. And so after Friday's rally, you have everybody basically saying, give me a reason to buy at all-time highs. There are people out there that would be willing to invest more in a strong and strengthening market, but there's just no reason today. No reason to celebrate, no headline news, no reason for the algorithms to dive in there and buy. And so when you find yourself at these resistance areas, a lot like retail is right now, investors look for a reason. Give me a reason to commit more money. Why should I pay a higher price at this point? I need something to believe that there's going to be an even higher price in the future. We just didn't have that today, so the market sort of floundered around. To be honest with you, every attempt that they had to try to rally throughout the day was just beaten down. People taking a little end-of-the-year profits in there in some of the weaker areas of the market. The same in the NASDAQ here, down about 0.5% on the day, and the Dow, same thing. There's no reason to go ahead and decide to buy new highs here. Now, you got that trade deadline coming up here. You got about 6 days left to go, so there's something that might have to happen before then. You had a report from China that they bought 300,000 tons of soybeans from the U.S. following, we took off we put a waiver on the tariffs for soybeans and some pork and stuff in particular last week. And so there's a little bit of action going on there. Saw a great article. I forgot to save the picture. I'll try to dig it up though, because I want to share this with customers where what is it that we buy from China and what is it that they buy from us? Really interesting sort of article there. I want to say it was Bloomberg, but it was just a simple little graph. Anyways. So that's what you have here to start the week. Not a whole lot in terms of the stock market, so I won't waste your time with that. Let's go on to our sector breakdown here for the day. What you have, week over week, you got energy, your bigger mover from the downside to up, meaning it had the biggest range from lows to highs last week. It continued a little bit today, although finishing the day basically flat on the day. On the downside, you had consumer discretionary. We'll use the XLY, why not? Had the bigger move to the downside, although it wasn't all that bad. You had very tight ranges across all the major sectors last week in terms of what we're used to seeing. So a little bit of that holiday volume coming into play there as well. XOP, I know some of you are looking for this to bottom out, and it did well today. Another 0.5% to the upside, getting back above the 50-day moving average. So looking pretty good there. I mentioned retail a second ago being at its highs, looking for a reason to buy. Give us some good holiday spending data that maybe it's a little premature, but anything that leaks out in that respect, any any sort of hint that consumers are out there spending a lot of money, in particular in these retail stocks, and you get a reason for the retail sector to break above highs. Now the XRT, by the way, lesson of the day, this is an it's called a modified equal weighted sector ETF. What that basically means is they get a little discretion there. I'll cover this sometime where in ETF world, when you're building an ETF or a portfolio like we do here at Jazz, there's something called sampling. You don't always have to model, like for example, we could build an S&P 500 fund, but we wouldn't have to use all 505 stocks in the S&P. We could actually sample, that's what they call it, sampling from some of the higher weighted stocks and go all the way down to some of the lower ones and just skip those, and you'd never know. The performance would be the same. In fact, some of the biggest S&P index funds out there don't even hold the entire 505 stocks in the S&P. Not only that, they don't even hold like 500. Russell 2000, even worse when you look at that. Not that it's worse, but they just, they don't need to participate in all 2,000 stocks to make an index fund perform the same way. Ask yourself that. If you can sample from an index and replicate the index, could you not sample from the index and slightly outperform? Sure can, yeah. I should do a video on that too, using ETFs, how we could do that. Okay, anyways, side topic, distraction. Retail needed a reason to break above the highs. Didn't get it today, although some of the retail numbers that came out today in terms of earnings were good. Consumer staples, just trying to poke to new highs, didn't quite get it there, but still looking good here at highs, very steady, consistent uptrend there. Goldman Sachs actually said they think you should avoid consumer staples next year, utilities and things like that, and they think you should be more consumer discretionary, and some of the more aggressive areas like tech and communication services, I believe, was their top pick going into next year. Healthcare. I'm going to point this out. We had a little extra time here today on a Monday to do a study for you. So healthcare has had a rather great run. The worse Elizabeth Warren continues to do, which we'll cover some of the political stats in a moment, but the worse Elizabeth Warren has done, the better the healthcare sector has done. So this is an exact inverse performance of her rankings as far as the Democratic candidates there. So anyways, healthcare pulled back here a little bit today, and we said, well, is that normal, right? What's to be expected there? And to be honest, I saw on TV, there was a Ken show or somebody did a stat, and I said, well, I'm going to do the same thing. We're going to find the same data. So here you go. If we look on the chart here, hopefully you can see it well. What we did is we went through and we said, all right, healthcare had a 5% month last month, did really well in October, basically right at 5%. I'm sorry, I didn't make these the percentages. These are the actual numbers. That's the percentages just rounded out all the way there. So just pay attention to the first two. What we did is we said when healthcare, the sector itself, now we're using the Healthcare Select Sector Index, which is what the XLV is attempting to replicate, or that's its benchmark is how I should say it. We said when this sector of the market has a 5% gain or more, what is the typical performance in the month after? For example, through the month of October, it gained 5%. If you look in the month of November, it gained 4.84%, so nice little follow through. In June, all of June gained 6.5%. In July, it gave back 1.7%. All the way down here at the bottom, you can see the results. The average performance on the healthcare sector after having a gain of 5% or better in an entire given month is actually negative. So the fact that the healthcare sector is pulling back a little bit, not too big of a deal. Median performance you can see as well. And the odds of it being positive are exactly 50-50. I tried to highlight that in, what are we doing? There you go. Tried to highlight that in the color-coded here just to make it simple. You got performance of 5% or more. You've got an even number of negative months versus an even number of positive months. The worst up here being in November of last year, which you can understand. It was a big sell-off at the end of the year. Gained 6.83%, gave more than that, and then some back in the following month. So just a little bit of data there maybe to share with you if you're invested in the healthcare space, if that's something that you focus on a little bit more. For whatever reason, maybe that's your sector, everybody seems to have a specialty. If you see it pull back this month, odds were basically a coin flip that it was going to pull back. And so it's good news for those of you that maybe want to invest in healthcare. You know that you really don't have to go chasing, right? There's a chance you get a discount of at least a little bit there, quarter point, and hopefully you get a little bit more already pulling back. It's basically even for the month, but I don't know. Sometimes it seems like you guys like that sort of data. So when we get a chance, we like to put it together for you guys. We love doing that for our customers here, but I thought I'd share that with you. Okay, let's dive into some individual stocks here. We've done our sector breakdown. We'll go, where's my pot stock people? I know you guys were watching today. Canopy Growth up 14% on the day. Boy, interesting study here. Constellation Brands They own like 38, 39% of Canopy Growth. They made a big investment, very big investment, in this company, and they've slowly been pushing out the CEO of Constellation Brands. They officially did it. The CFO of Constellation Brands, which is ticker symbol STZ, they got the CFO to become the CEO of Canopy Growth. They nudged him out, man. He was already on the board and everything, so it was a matter of time, but they finally got this done. People see that as a positive, maybe some more experienced leadership moving the ship now. So the stock was higher by 14% on the day. Macy's was downgraded today by Goldman Sachs. They put a $5 price target on the stock. It's trading at 15.5 right now. They said, warning, Macy's has significant downside pressure to come, and the stock fought it off a little bit. It was up 2% on the day, but Goldman Sachs extremely bearish on Macy's. SunTrust, we talked about this last week, getting booted out of the S&P 500, not because they did anything wrong, but because they merged with BB&T. This happened earlier in the year where they talked about joining forces to make now the 5th or 6th largest bank out there. They had no choice. They got to compete with the big guys out there, so they decided to work together rather than buy each other out. So SunTrust and BB&T are officially now one company. It's called Truist Financial, right? There it is. Truist Financial, ticker symbol TFC. So if you're interested in that regional sort of now large bank category there you go. I thought I'd also point out a couple other banks have figured this out. Texas Capital Bank shares, the stock was higher by 10% on the day, very small bank. They decided to work with IBTX, there it is, Independent Bank, stock was also higher on the day. They are going to merge together. In other words, they're not saying one of us is better than the other. We're not buying you out. We're just going to join forces. So a little bit more of that going on in the space. That's a $5.5 billion merger of equals. You got Skechers, people that make the shoes I'm wearing at the moment. Barron says it should have the same growth pace as Nike. And, well, I don't know if that's necessarily true, but that's what Barron said over the weekend. And they said, well, because that it should have the same growth pace as Nike, we look at Skechers is trading at 16 times earnings. Nike is trading at 30 times earnings. So that was their justification as to why you should buy a stock that is up 72, 73% on the year so far. They think there's a lot more room to go on Skechers. I'll let you decide on that one. Just bringing you the news, you know what I mean? Bringing you a little news. Anyways, what do we got going on here? No data? Capital One, for whatever reason, won't come up. Let's try a different symbol here and see if it's just stuck for a second. Yeah, it might just have been stuck for a second. There we go. Capital One up about 1% on the day. Barron said that these shares of the stock are still discounted by 25%. They said, go ahead and take a look. You got year to date, where are we at? Well, basically right about there. Year to date, the stock is up about 34%. Barron said you got another 25% upside on Capital One. Lots of great things they mentioned about them. Moving on to Apple, pulled back off of highs a little bit today, down about 1%. Was one of your laggards in the Dow today. They got a Golden Globe for their morning show. I think it's just called The Morning Show. So they got a Golden Globe nomination for that. Nomination. They didn't get the Golden Globe. They just got the nomination for that. The issue was Netflix got 34. So everybody that thinks Apple or Disney is just going to come in and squash Netflix, well, they got a lot of work to do. Netflix got 34 Golden Globe nominations and their first nomination for Best Picture, by the way. So there's, maybe a hint of an Oscar on the horizon for Best Picture, which will be a first for them. Also, an analyst came out with their report. I think it was Beckett. I can't remember. Analyst came out and said basically their iPhone 11 production is about to be cut. They're going to have to cut that. And so Apple took a little bit of a hit on that news. Not that it couldn't afford it. It's had a good year so far, so that's that one. Home Depot got a much-needed bounce off the 200-day moving average, up 1% on the day. Wells Fargo said, hey, Wednesday is investor day for Home Depot. And Wells Fargo said, we are buyers of the stock going into that event. So today, tomorrow, and Wednesday, they'll be buying the stock. They got a lot of positive things to say about Home Depot as well. All right, you got 69.1% of the stocks above the 50-day moving average. Healthcare leads the way with 85%, financial 79%, and consumer staples coming in third place with 72%. On the downside, real estate continues to be your worst performing area of the market with only 31% of the stocks above the 50-day moving average. Energy and utilities tie for second worst place with 39% still. So if you're looking for, weaker or stronger areas of the market, I like to point that stuff out for you. You got 24 new 52-week highs today, and only 3 of them gained 1% or more. One of those stocks, which happens to be one that we own, is Bristol Myers. It gained 2% on the day, hitting new 52-week highs. Looking good, Bristol Myers. They just bought Celgene, by the way. So if you're one of our customers and you noticed a big adjustment in your account, that was because Bristol Myers bought Celgene, and there was a conversion share for a while, and now it should be all taken care of. That happens automatically for you, but looking good with Bristol Myers there. The next 2 best performers were Skyworks. This is an Apple supplier of technology, and Qorvo. I always spell this wrong. I got it. QRVO is the ticker symbol. Both of them are heavy suppliers to Apple, and Bank of America double upgraded both stocks. Very rare you get double upgrades, but Bank of America tends to do that to get attention, and it works. They do a good job there. So those 2 were higher on the day. I thought I'd point out FMC Corp, ticker symbol FMC, makes it easy. Hinting at a breakout, poked up there just a little bit today, but lower volume today and lower volume across the board in the market. So early to say if this is going to be a strong breakout or not, but just thought I'd point that out for you. Of the 24 new 52-week highs, 50% of them closed in the lower half of the day's range. So the stock opened here, maybe went down a little, went up a little bit, had a high, had a low, closed in the lower half of that range. That's a little bit of a negative sign going into the rest of the week, at least maybe tomorrow. If you have your leaders, which I point these out every day, if the leaders are starting to get a little tired, you expect maybe there's going to be a bit of a pullback. So we'll see. We'll be here and we'll cover it. There was only one new 52-week low today. That was Occidental Petroleum, and it's been on the list quite a bit. Just a weak stock that continues to be weak. Here's some interesting stats for you before we take your questions. If you add up all the analysts across the entire market that cover every single sector and every single stock, we see which sector has the most buy ratings, right? And which sector has the most sell ratings. So communication services, we could probably just go up here. If you want to use like a sector ETF, XLC would be communication services, just the more popular one. Communication services has the most buy recommendations by analysts, with 57% of analysts being strong on that one. Healthcare would be second, which is 55.6%. They have the least amount of buy ratings on utilities, 36%, and consumer staples is second with 38.9% buy ratings, so a little bit weak there. But consumer staples here, well, we're using it. XLP, you see on the chart there. Analysts actually got this one right. This is the sector where analysts' price target at the beginning of the year is closest to where it's at now. So when an analyst says, we think something's going to this price, what they're telling you is 12 months from now, that's what they expect. And then 12 months from now, or getting close to that, you can look back and see how close were they, with what was their margin of error. And consumer staples was the one that they got most accurate. So all of those that had buy ratings with price targets in this area were the most accurate on this sector. I thought that was pretty cool. Quick little study for you. No fancy chart, sorry about that. And finally, we'll wrap it up here with you betting on the election there. A lot of people are like, I don't really like to vote, but I'll bet on the election. Here's some stats for you. 22% chance that Biden wins the Democratic primary. That's the highest. Elizabeth Warren's currently at 12%, I believe. 85% chance that Trump wins the Republican primary because Mike Pence gets a little bit in there. Elizabeth Haley, or not Elizabeth Haley, Haley, I can't remember her first name. She's in second place, actually, which is not like technically running, but you know what I'm saying. So 85% chance that Trump wins the Republican primary. Currently, there's a 44.6% chance that people believe Trump will win the re-election. That beats everybody else at the moment because Joe Biden comes in second place, winning the presidential election at 12.6%, but gaining steam there. So I thought as we get into election season and there's all this drama over here, let's have fun with stats. Let's see what happens. I don't really want to get into politics, but you know what I mean? Let's just see what happens. Bernie near the bottom, I believe, at 2.2%. Yep. There you go. Hello, Halcio. How you doing, sir? You like your pot stock? Okay, cool. You're a happy camper today, then. Disney was one of the weaker sort of players today, continuing to pull back from its earnings move and the Disney Plus announcement there. Look, it got a little extended. I don't know that there's any amazing news or anything here. I think there's a little bit of the underlying, like, oh my gosh, Disney's not going to squash Netflix. And so just a little bit of weakness there as people try to move a little bit of money around. I don't think it's anything to worry about at the moment. You advocate small contributions a month, so every 100 I'm putting in, you're losing 5% a month to fees. Why is that? I hope that's not the case. That sounds like a case of maybe American Funds, Principal, Transamerica, something like that. You have an account somewhere like that where they charge you that 5%. Don't do that. That is the most ridiculous waste of money. Please don't do that. Go somewhere where they have no fees, right? People can make I have customers that make deposits every day, real small, everyday deposits. There's no fee for that. No commission, no nothing. Just you make the deposit to where you have the best advantage. And if someone can't give you that advantage, naturally, right, I hope you think of us, but go where you get the advantage. This game is hard enough. Get the biggest advantage you can get. Yep. George coming to us from Hong Kong Airport. Is that the case? I don't recognize that symbol for anywhere else besides Hong Kong. That's crazy. Wow. Matthew says, yeah, give us a shot. I love it, Matt. Thanks. Give us a shot. If you're not happy, you just transfer somewhere else. That is definitely the case. Yep, we do it that way. It's your account. We'll manage it. If you don't like that, you can move on. No big deal. But thank you for that. McDonald's. So the question is, McDonald's not participating, in your opinion? Yeah, it's just floating around near lows. Not a good thing, really, if you're trying to pick a bottom. So McDonald's sold off rather aggressively, had a decent little bounce for a couple days, but then flatline. You don't like to see that. That's where you get people that say, okay, maybe it's not going to bounce, and they walk away. You can always put it on a watch list and come back another day once it starts to move. You don't have to catch every last penny of these stocks. You can wait till it starts to wake up a little bit, if it starts to wake up a little bit, and then go from there. So there you go. Trump's only at 85%. Yep, technically only 85%. I think Pence had 4% at the moment. I lost my sheet, but I'm pretty sure Pence was at 4%. Nikki Haley, for God's sakes. She was in second place. I think 8% or something like that. Millennial motivation. Thinking about creating your own YouTube to make daily videos, give financial advice. Any tips for a starter, or feel like you'll embarrass yourself, but you'd like to give the advice? Yeah, you will embarrass yourself. I do it every day. Just get used to people telling you you've embarrassed yourself. Like today, I'm so sorry. I posted a video. The audio is really low. I have no idea how that happened. Some people said it's fine. Some people said it's low. Embarrassing, right? Just get started, man. Just get out there and make it happen. Jay Wren, should you set up an account online before you expect a phone call for you to discuss the game plan? I leave it up to everybody. If you'd prefer to chat on the phone, that's cool. If you prefer an email, that's cool too. I will pull you along as you open your account. And a lot of times, so the second part of what we do is create that sort of game plan, how much money needs to go where and stuff. So a lot of times people get to that point, they find out how much they have to save in their 401k and their Roth IRA and stuff, and then they go, I want to talk. I need to know what the game plan is here. So if you want to wait till that point, that's cool. I totally leave it up to anybody. I have some people that like to talk on the phone a lot. I have some people that just send an email every now and then. 100% flexible there. I don't have any rules in that respect. So totally up to you. Cool. I'm sorry if I missed some of your questions here. You got several bull spreads on McDonald's. Yeah. Well, all right. Time's moving against you then. So you're hoping for a quick pop here, some good news in the short term. That's cool. I'll cheer it on for you. When is it time to buy a breakout, and when is it too late? I did a class on that, actually. The couple different ways you could buy a breakout, whether you buy the breakout, whether you wait for the pullback, or whether you catch the next move. We could probably do a video on that. It's a little off topic, but something I like to talk about. Sure. Yeah. I love it. I have so I have a list. This year, my motivation, I kind of did it on Instagram, was for you to go build something. And we built this entire studio, so I wanted to kind of wrap the year up with that. Next year's topic is going to be go read something, right? I got a whole list of books that I'm hoping to get for Christmas. And so I plan on doing a lot of reading and sharing that with you guys, some of the good stuff that we come across. And the garbage, too, if there's stuff that's really not good there. Morton says folio minimum is 415. I'm not sure what that means. There's no minimum. You could put really anything in there. Your bank maybe limits you. Does your bank tell you you can only do like a $5 minimum or something? I don't hear that often. The smaller banks sometimes do that, but there's no minimum. The question is, how profitable is trading options? Is this like anything else? I mean, if you're in the beginning, probably not very profitable. I don't know many people that just hit the ground running. There's actually one guy I met. We've become good friends over the years. He just had a knack for it. He knew what to do and when to do it. He studied it and he did great pretty much from the start. Through the whole meltdown of '08 too, by the way, and made money. But it's like anything else. If you're going to trade stocks, you're not going to be very good at it in the beginning. Just like anything else. So you start cooking for your spouse or whatever, they're not going to like the food in the beginning, but you'll get better. You just got to keep practicing and stay small. Learn more about the process and less about strategy is what I always say. Help you develop your own strategy there. Morton, $100 a month loss, 5%. Yeah, I'm sorry to hear that. If you want, send me an email or something. Let me know where you're at. Maybe I can help you change that somehow. But yeah, you should not be paying 5% on a deposit. I don't like the sound of that. That one would bug me a little bit. And I've heard of that, so that's why I named off a few of those companies, because I've heard of that in the past there. That's a good one. Oh, you got the limited, my Louis Armstrong. Yeah, man. I love it. I got 2 of them on the wall there. I love it. What's up with the VIX today? It was rather quiet given what, kind of the markets did pull back a little bit. 5% is not bad. You just have people trying to pick a bottom there and picking the top in the market, getting a little bit of protection as we go into year end. Other than that, I don't know that there's anything crazy that happened there. Just pick up in volatility a little bit. Yep. The Jazz Book Club. If you're a customer, do we help with your personal tax account? Yeah, we can help with any account. It doesn't have to necessarily be something we have here. Like lots of our customers have 401ks and things like that, and we can't physically manage it for them, but I certainly can help you. Yeah. Happy to do it. I think I basically grabbed everything for the day. Tomorrow you got earnings from AutoZone, Dave & Buster's, GameStop, and Ollie's Bargain Outlet. So we'll keep track of those and talk about those tomorrow. You also had Stitch Fix report after hours, Chewy.com. They both beat, I believe. They did well. And Toll Brothers also did well after hours. So we can cover those tomorrow if you like. Toll Brothers, yeah, slightly higher there. Not bad. They got their conference call in the morning, though, so we'll get more excitement after that. You guys enjoy the rest of your day or evening, wherever you're at, and we'll see you again tomorrow. Thank you so much for watching. I really appreciate it, and enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.